Oh, good morning. Good morning, Dan.
Morning, Michael.
Welcome to another download, number 39.
39.
Yeah.
Amazing.
Sneaking up to that magic 40 mark. But it's amazing again.
Waiting for 52. Andrew set a party at 52. So.
Oh, did he really? Yeah. Okay,
Well, he did now. So.
We'll have to remind him of that one for sure. Yeah, Dan, look, another hectic sort of week. We've been, well, I know here we've been bogged down with NAB rights issues and that sort of thing. Been a lot of questions and queries about that. But by G2, the market's been pretty bouncy as well over the last couple of weeks.
Yeah, the banks have certainly come off, haven't they? Maybe on the longer term interest rates in the US going up, so their cost of funding's up a bit, I think.
Yeah, that's right. Yeah, certainly. Yeah, talks now that rates are going to go up a little bit earlier over in the US now than what first expected. But
the other thing is Greece. It looks like they're going to default on those debts that are due early next month, so that might chuck a bit of a spanner in the works over there as well, I think.
Yeah, so gee, this Greece thing's just been lingering around for a long time. That the sooner they can put that to bed, the better, really.
Yeah. The other thing that came out last night actually was Spain. They're I think, starting to want to elect parties that are against the paying down the debts as well, the austerity measures. So, you know, there might be a bit more issues over there.
Yes,
those hot-blooded Mediterraneans. Yeah.
And that's always been the big issue with Greece, hasn't it? As an independent, it's never been a great problem, but it's this issue of where there's smoke, there's fire, and whether the bigger economies...
And it just sort of simmers away, doesn't it?
Yeah, absolutely. But yeah, you're right there. They can get a little bit feisty over there, that's for sure. But
few Uzos.
Yeah, but certainly anyone who's got some NAB entitlements and they're looking at taking them up, you'll need to get cracking on those. Money needs to be down in Melbourne by the 1st of June, next Monday.
It's really BPay now, isn't it?
Yeah. Get your cheques either in the post today at the latest or BPay, but well worth taking up, we think.
Yeah, $5 discount. It's got to be worth it. And what's that about? A 6.2% yield at the 28.50.
Yeah, so very good yield. And you know, banks, albeit they've come off a bit, they're still in reasonably good condition, we think, and certainly much better value at least anyway. Yeah. And what have you been buying, Dan, or been keeping an eye on?
Yeah, interestingly, this week, Healthscope, there's some reports that they're looking at selling their pathology division, and that's been a bit of a drag on their business. The other thing is Medibank, cutting their fees payable on some of those pathology works, so it's probably a good time for Healthscope to do it. We've got a lot of people in Healthscope, Michael, which flowed on out of the notes and out of the initial public offering there when it was floated again. Just a bit of a recap. Private hospitals, they've got about 67% of elective surgeries done through private hospitals. Yeah, it's pretty amazing, isn't it? Yeah. Healthscope's got 44 hospitals. And with ongoing developments, they're bringing on some 460 beds by 2016 and 1,000 beds by 2017. Yeah, so it's a lot of beds coming online as we get older and fatter, I suppose.
Yeah. And that's it. And certainly the thematics behind healthcare generally look very strong, don't they?
They do.
Ageing populations, unhealthier lifestyles, you know, wanting to sort of keep us alive as long as possible, all of those sorts of things.
Those numbers over 65 by 2030 is just incredible.
Yeah. No, definitely.
So one certainly to, you know, maybe to top up on if you've got some. I think now's the time, under $3. So
yeah. No, they have come back a bit, and certainly back into a pretty good sort of buy range at the moment. Absolutely. Still no franking on the dividend, I don't think.
No. That will the yield's low, so it's certainly a growth stock. But if you look at what Ramsay's done, it's a growth stock, isn't it?
Oh, they've been extraordinary, haven't they? Yeah, very much so. Yeah, I've been keeping a bit of an eye on CIMIC. Now, CIMIC may not be a name you're familiar with, but it's actually the new name for the old Leighton Holdings. And Leighton, of course, pretty checkered past with Leighton. Look, they've got a myriad of issues. You know, you could write a good book or so on some of the problems that they've had. You know, corporate corruption. That Middle East business has burnt a lot of money up. Cost blowouts on some of their big projects. So
some companies just aren't meant to go overseas, are they?
Exactly right, and you might be thinking, well, Michael, what the hell are we doing looking at Leighton for? The reason is basically around about a year ago, Hochtef, the German parent, increased their holding in Leighton. They did own around about 50%. They've now increased that to 70%. Hochtef in turn is primarily owned by a big Spanish group, Grupo ACS, which has basically come in, redeveloped the company. They've got a new CEO, hopefully ditched a lot of those boardroom issues.
Yep.
But what we're seeing is Leighton divesting itself of a lot of these non-core assets. They sold John Holland there a little while ago, cleared the balance sheet. Might be worth having a look at. Not for the risk-averse sort of investor, paying a pretty good yield of about 5%, but yeah, keep an eye on it, see how it goes.
We really need the feds to get those infrastructure projects kicking along now, don't we, for those companies?
Yeah, absolutely. No, if we can see further input, further, you know, PPPs, public-private partnerships, all of those sorts of things.
I suppose, though, Michael, it flows into a little bit what we were talking about last week with Argo Global Infrastructure Fund. I mean, they're well positioned to put their hands up for a lot of those sort of products, those sort of developments now that, you know, it is an international flavour in the company.
Yeah, very, very much so. So it is, you know, on the horizon. It does look like it could be, it could be a sector to really, really focus again on. Again, not for the faint-hearted. It is got a history of, cost blowouts. But
crash and burn.
You're exactly right. So, but keep an eye on them. CIM's the code. They are still the biggest contractor in Australia. So there is some horsepower there, no doubt about it. But you know, the moons certainly need to be in alignment for them to keep delivering good dollars.
And I suppose to finish, interest rates next week.
Yeah.
What do you think?
Just had a quick look at the ASX tracker, so I've done a little bit of cheating. There's about a 4% possibility of an interest rate cut next week.
So not much possibility.
Yeah, you'd have to think that it's probably steady as she goes now for a little while.
Yep.
You know.
And on that, there's a lot of reports saying that business aren't really benefiting now from these interest rate cuts. They're waiting to see what the economy does before they commit to putting money in, you know, growing their business.
Yeah,
so
very
interesting.
Yeah, very true it is. There is a lot of talk that another rate cut may send a very mixed message that perhaps we are starting to hit the panic button and that sort of thing. But yeah, at this stage, looking like we'll be sitting steady. But yeah, it won't be long until the next one rolls around and we'll have a look at it then.
That's right. Then it'll be tax time.
Absolutely, yeah.
Very good.
Thank you for that. Yeah, we'll see you next time.
Cheers.